Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is February 16th. Let's start with the charts. Opened up really poor today, but bonds have somehow struggled back. We're looking at 102.9 this morning. Support's coming in below us at 101.80, and we have resistance up above us about 102.50. So you can see we're right in the middle of the trading range. Reports that came out, now this is the interesting thing, guys. Philly Fed came out, not bond friendly. Jobless claims, not bond friendly. Housing starts, not bond friendly. Okay, so we see all of this bad reports coming out. We did open a little bit low, but we're trading up really high. Well, you know what, guys? Sorry, but I think this is really just investors just trying to, we hit the bottom. They're trying to like rally it up. They're going to probably sell off their losses, or sell off their gains, and I think this is going to be really short-lived. There just isn't really a lot of data to support the trading being up as high as it is right now. So, I don't like it. I don't like it. We did see a coupon rollover at about 24 basis points back on the 10th over here. So nothing to really like stress out about. But coupon rollover, I think I mentioned this to you guys in the past. It's kind of like if you own a stock. Let's say you own one stock in a company. It's worth $100. Well, a stock split means they'll take that one stock worth $100, they'll split it. You'll have two stocks worth $50. So it doesn't really do anything. But of course, someone looking at charts are going to be like, hey, their stock dropped, from $100 to $50. Kind of tricks out the charts a little bit, but nothing too crazy. So 24 basis point rollover here. But yeah, I would say don't get too excited about this little rally. I don't think it's going to be long-lived. We still have a strong labor market, so things are really not bond friendly right now. So I mean, really, it's important for us to be careful. To kind of quantify where we're at, bonds are trading. Last month, Freddie Mac reported the average consumer received a 4.5 rate and paid a half a point to get there. Last month, if bonds were trading on average about 102.40, and now they're only trading at 102.9, that means we're about 31 cents worse. That means the average consumer, if they paid a half a point before, they might be paying, almost a full point now. So bond market is definitely worse than our averages that we saw last month. So what about the outlook? What about the forecast? Well, the analysts are pretty neutral. Both the analysts, they don't see any gains, they don't see any major losses. I'm going to actually go a little bit against the analysts. I don't like the trading today. I don't think it's reinforced by the reports. I'm going to actually do a forecast of 101.60 to 102.20 through next Thursday. And if this forecast is accurate, that means we won't really see much change in rates, but we could see a positive change of maybe 11 basis points, or things could get worse by half of a point. I really think it's going to be short-lived, this little rally we're in, but I could be wrong. Nobody has a crystal ball, So I would say if you're floating right now, be super careful. Just be super careful, okay? That's it for now. Hey, but we'd love to hear from you. We got some great questions here last week. Gentleman out of Las Vegas, thank you for that. I hope the answers were beneficial to you. But man, we'd love to hear from you guys. Leave your comments down below. Everything likes to be liked. So does the video. Hit that like button, guys. And if it's your first time on the channel, at the top left, you'll see this ugly guy. Click on his face. That will get you subscribed to the channel. Just give you little updates, when we release new projections on what's happening with mortgage rates. You can always turn it off if it's too much, but we only do about once a week. And at the top right, Mortgage Bonds 101. So if you looked at this video and you're like, what the heck do these charts mean, and how do the traders making these things go up and down impact me as a consumer trying to get a mortgage? Bonds 101, great video, help you out. Anyway, that's it for now. We'll see you next week. Have a great weekend, guys. Bye-bye.